Hey YouTube, Matt Decker here with Leveraged Wealth Management. Today, I'd like to tackle a topic that I've really never covered, and that is the benefits of using whole life insurance as wealth accumulation, as an asset class, as a way to grow your money that's not correlated to the stock market. So if you've seen my channel before, you know that I talk a lot about index universal life, but I figured it was probably time to go through some of the benefits of whole life insurance. And so let's go ahead and just do that. Before we get into whole life specifically, I think it's best if we lay kind of the foundation, the groundwork. So number one, the reason that a lot of people use life insurance to build wealth is because it comes with a lot of unique tax advantages. So let's just go through some of those advantages of all life insurance, all cash building life insurance really quick. So number one, there's no income limit on contributing money to life insurance. Now that's important because of some of the other benefits that come later on. Number two, there's no annual limit in terms of how much you can put in. So there's no income limit. You can make as much money as you want. You can still contribute to life insurance. And there's no limit on how much money you can put in any given year. Now, 1 and 2 are important because number 3 is your money is actually going to grow tax-free. So your money is going to grow tax-free. And then number 4, your money is going to come out. It's going to be distributed tax-free as well. So these two things most closely correlate to a Roth IRA, which goes back to number 1 and number 2. The Roth IRA has income limits, and the Roth IRA also has annual limits in terms of how much that you can put in. Life insurance doesn't have either of those things, and so it's a pretty phenomenal tool for building wealth on a tax-free basis. So money grows tax-free, money is distributed tax-free. There is a tax-free death benefit. Number 4 would be you have access before 59.5, which is different than the Roth IRA. In the Roth, you have access to your principal, but not your gains before 59.5. Life insurance, you have access at any time that you want. It's not an ERISA plan. There's no qualified plan parameters set around life insurance. Number 5, it is not correlated to the market, which is important. Not correlated to the market. That would be, of course, unless you're purchasing a variable life insurance contract, which is a discussion for a whole nother day. Since we're talking about whole life, though, it's not correlated to the stock market. And then we'll round out with number 6, and this is going to be depending on the state that you're in, but in a lot of states, there is really great asset protection laws surrounding life insurance. So life insurance as an asset protected class, depending on the state that you're in, that's something that you might want to look into. So those are, real quick 6, or I guess that's actually 7. I've got 3 on here twice. 7 benefits of cash value life insurance in general, but let's dive more specifically into now, okay, well, what about whole life insurance? Because all those things are going to apply to whole life insurance. You can put in as much as you want. There's no income limits. The money's going to grow tax-free. It's going to come out tax-free. There's a tax-free death benefit. It's not correlated to the market. There's good asset protection laws in place in most states as it relates to life insurance. When it comes down to whole life insurance specifically, there are some things that you want to key in on. So number 1, you're going to have a cash guarantee, meaning the company is going to guarantee a certain rate of return on your cash. So that's important. Number 2, there's going to be a premium guarantee. So the company is going to say, as long as you pay this premium, this guaranteed premium, we are going to give you a guaranteed cash. So the company's never going to ask you for more dollars. There's a premium guarantee. And then number 3, there's a death benefit guarantee, meaning as long as you pay the guaranteed premium, you're going to have a guaranteed death benefit. So no matter what happens, if you pay this premium, your family is going to get a death benefit, and you are going to know at a minimum what it's going to be because there is that guarantee in place. Now, when you combine a cash guarantee with a premium guarantee and a death benefit guarantee, with the fact that life insurance is going to grow tax-free and it's going to come out tax-free, either in the form of income or in the form of a death benefit, this makes cash value life insurance, specifically whole life insurance, in really a class of its own in terms of what it's offering people. A cash guarantee, premium guarantee, death benefit guarantee, all the while your money's growing tax-free and it's coming out tax-free. Really no other vehicle is going to do that. The only thing that's going to come close is if you would decide to put an annuity inside a Roth IRA. But in order to do that, you obviously already have to have a Roth IRA sitting around that you can facilitate that transaction with. With whole life insurance and life insurance in general, you don't have to worry about that. Okay, so why has it taken me so long to talk about whole life insurance if it's got all these great provisions and all these great guarantees and everything grows tax-free and it's the only thing like it? There's nothing else that does those things. Why has it taken me so long to talk about whole life insurance? Well, the thing that you have to understand about all those benefits associated with whole life specifically is that every time you add a guarantee, you add an expense. And so something that I tell people all the time is that guarantees are expensive and risk is free. Guarantees are expensive and risk is free. What does that mean? It means if you are looking to anybody else to provide for you a guarantee on your dollars or a guaranteed premium or a guaranteed death benefit, if you're out there in the world looking for guarantees, people are going to charge you for those guarantees because providing a guarantee becomes very expensive for the person who's providing it. It's not cheap to guarantee a rate of return, to guarantee a death benefit. That's actually really expensive. On the flip side, if you're willing to take a little bit more risk and take a lower guarantee, well, risk is free. You can go take as much risk as you want. No one's going to charge you to take a bunch of risk. So whole life insurance has all these great benefits: guaranteed premium, guaranteed death benefit, guaranteed cash value. And because it has those three guarantees stacked on top of one another, it actually becomes one of the most expensive forms of cash value life insurance. So it's one of the most expensive forms of cash value life insurance. And for that reason, I typically don't recommend it if the goal is actually to accumulate as much cash as possible. If your goal is to accumulate as much cash as possible, you probably don't want to be using the most expensive vehicle to do that. So another way to say that would be, let's assume I live in Atlanta, Georgia. Let's say that I wanted to drive out to San Diego. Okay, now I could get there a number of different ways. Let's assume that flying was out. I drive a Ford F-150. I can drive my Ford F-150. That gets 17 miles to the gallon on the highway, and I will get there in one piece, right? So I can drive my Ford F-150, and everything's going to go fine. It doesn't get great gas mileage, but I'm going to get there. On the flip side, if I had access to it, I could drive a tank. I could take a tank all the way out to California, and I'm probably going to get there. I'm going to get there a whole heck of a lot slower. My gas is going to be a whole heck of a lot more expensive. And if I run into trouble along the way, you better believe I'm going to be prepared. So I could drive a tank out to California. But the question becomes, why would I do that? Why would I choose of my own free will to drive a tank out to California when I have access to an F-150 that's going to get me there faster, probably safer, and a whole lot less costly? Well, my opinion is there really is no reason to take a tank out to California. And because of that analogy relates to whole life insurance. Look, whole life insurance does a lot of really awesome things, and it's one of the only vehicles that combines all those 9 benefits kind of together in one vehicle, one packaged vehicle. But the bottom line is it's so expensive that I think that there are better options. I could use whole life insurance to build wealth and accumulate cash, and it could work for me, but there might be better vehicles that will get me there faster, safer, and cheaper. And that's kind of the position that I've taken. And that's why for most people, I actually don't recommend whole life insurance. I recommend index universal life because I think it gets the same thing and it gets you there faster, safer, and cheaper. Now, I actually started in this industry only selling whole life insurance. I was a captive agent. I was new in the industry. I didn't really know what I was doing. This is about 12 years ago. And I was only selling whole life insurance. And so it was all that I knew. So my experience is most people who sell whole life insurance, it's all that they know. They're maybe a captive agent. They don't have exposure to other products that are out there. Some do, but most don't. And so what I find most often is when people talk about IUL and their experiences in whole life, what they say is, well, IUL is dangerous because it's not guaranteed. It's not guaranteed. Okay, well, that's kind of true. It's also kind of not true. There are guarantees with IULs. But what I find so interesting is that when people are looking at whole life insurance and when they sell whole life insurance, we talked about those 3 guarantees, right? Premium guarantee, cash guarantee, and death benefit. We'll just put that key up here. Premium, cash, and death benefit. Most oftentimes people are really focusing in on this cash guarantee. There's a guaranteed cash. And when you look at a whole life insurance policy, it's going to look something like this. So you've got your age over here, so let's just say 45, 46, and then on down. And then you've got 2 basic columns. Okay, you have your guaranteed columns and you have your non-guaranteed columns. And each of these columns is going to have a cash value and a death benefit, cash value and a death benefit. And what I find most often is that when people are talking about whole life insurance, they are conflating the guaranteed column, which is over here, with the non-guaranteed column that contains all of the real significant cash growth. Let me say that again. Most oftentimes when people are talking about cash value life insurance, specifically whole life insurance, and they're talking about the guarantees, you have to understand the guarantees are only located over here in this guaranteed column. Okay, there's a whole other set of columns that most people are using to sell whole life insurance, and it's the non-guaranteed values. These values are based on what's called dividends. Dividends are not guaranteed. Now, what most people that sell whole life are going to tell you is that, well, the dividend may not be guaranteed, but we've always paid a dividend. We've always paid a dividend. And I think that that's a really worthless statement. Because if you're going to sell whole life insurance for the guarantees, you have to sell the guarantees. And the guarantees in whole life insurance, depending on the company that you're going to be working with, if you're looking at the cash value and you go out, 30 plus years, the guarantees are going to be anywhere between 0.5 and 1.5%. That's the guarantee that you're talking about. 0.5 to 1.5% cash growth. That's your guarantee. Now, I don't think that's a relatively attractive guarantee. I think that you can pretty much get that anywhere you want to get it. There are CDs and money market accounts that pay that much. There are guaranteed annuities that pay more than that. So when you talk about guarantees associated with whole life insurance, I don't find it all that compelling because nobody's selling off of the guarantees. They're selling off of the dividends, and they're using this statement of, well, it's not guaranteed, but we've always paid one. Therefore, you should think of it as it being guaranteed. And I don't like that. I find that disingenuous. And I want to show you what I mean here. So I've actually got a report that goes through and it shows you whole life insurance companies, and it shows you the last 20-year performance relative to what people were being shown on paper 20 years ago. And I find this a really productive conversation because it highlights that whole life insurance suffers from some of the same problems that any other life insurance policy suffers from, and that is that the projections are not guaranteed. The projections are not guaranteed. So you can see here, this is just a report that's available to the public. It's got a bunch of companies in here that were selling these whole life insurance policies 20 years ago. And so these were sold in 1990, and then they're looking at the performance as of 2010. Say they were sold in 1990, looking at the performance as of 2010. Now you might say, well, why aren't you using a more updated study? The reason I'm not using a more updated study is because the person that actually put all these studies together passed away in about 2011. And so these studies are no longer being done, which is unfortunate. And they're difficult to do. So nobody's kind of picked up the torch. What I want to key in on, though, is, if we just look at the difference between the illustrated rate of return, so that's right here, total cash value, illustrated rate of return. And so if we go back to, looking at our little pseudo illustration here, the non-guaranteed values, everything over on this side of the ledger, the non-guaranteed values. Hey, we're paying a dividend. No, it's not guaranteed, but we've always paid a dividend, and people think it's more guaranteed than it is. So that's what we're looking at. Illustrated rate of return. You can see that these illustrated rate of returns, the highest one is 7.61. The lowest on here is 5.91. So these would be the rate of returns that the dividends were generating in 1990, and they projected that forward. So those are really healthy rate of returns for whole life insurance. The problem is that the actual rates of returns over that 20-year track record are nowhere near any of the illustrated rate of returns. And so this is my pet peeve with whole life insurance. People sell it based on the 3 guarantees: premium guarantee, cash guarantee, death benefit guarantee. Those things are real. They do exist. They're also very costly. The problem is that nobody's buying whole life insurance based on the premium guarantee, the cash guarantee, and the death benefit guarantee. They're buying whole life insurance because of the projected dividends, the illustrated internal rate of return that looks really, really good. And when it comes down to it, the problem is that when you go out 20 years, the illustrated rate of return in all of these companies that are still around doing business, and some of them are very well thought of, the actual internal rate of return is nowhere near the illustrated rate of return. The best 2 on this list are Northwestern Mutual, which has an actual rate of return over the last, from 1990 to 2010 of 5.11, and Savings Bank Life of Massachusetts also at 5.11. Those are the 2 best. Now let's throw out Savings Bank Life of Massachusetts just because not many people know about them, and they're not I wouldn't consider them a massive company. Northwestern Mutual, much more respected. Everybody knows who Northwestern Mutual is. So there's a huge problem with Northwestern Mutual, and it's a problem that nobody really talks about. So you got 5.11. They illustrated 6.60. So they didn't miss by that much, right? They were off, but they weren't off by that much. They were off by 1.5%. The question that nobody asks when it comes to whole life insurance is, what is the cost of accessing your dollars via loan? What is the cost of accessing your dollars via loan? Because at some point, if you're using these policies for tax-free distributions, you're going to have to start taking loans on the policy. And in the case of Northwestern Mutual, the loan cost on their policies is 8% per year. 8% per year loan cost, at least that's what it is as of today. 8% loan cost, and the illustrated and actual IRR are nowhere near 8%. So what does that mean? It means as soon as you start taking loans on those policies, they're charging you more than you're making. And that's a problem. Here's the other thing that you'll notice that I find just absolutely fascinating. All the people that talk about how index universal life insurance isn't guaranteed and they slam it for not being guaranteed, the same thing is true of the non-guaranteed dividend scale. It's not guaranteed. Okay, the same thing is true. What's really interesting, though, is if you key in on these actual IRRs from 1990 to 2010, nearly all of them closely mirror the fixed account that pays out on index universal life insurance policies. There are index universal life insurance policies that have fixed accounts that pay anywhere from 3 to 5%. 3 to 5% fixed account, and that's almost exactly what all of these whole life insurance companies were generating as an internal rate of return over a 20-year stretch of time, and it's more costly. Again, why would you drive a tank out to California when you can take your truck, you can take your car, you're going to get there faster, cheaper, and safer? So, does whole life insurance have some unique benefits that really no other product can offer? I would say yes, it does. It does have some very unique benefits that no other product out there can offer because your money grows tax-free, it comes out tax-free, there's a tax-free death benefit, you have access to your dollars before 59.5, it's outside of ERISA guidelines, it's not a qualified plan, you can put in as much as you want in any given year, and you can put in as much as you want no matter how much money you make. That makes it an extremely attractive policy. Couple that with the fact that there's a premium guarantee, a death benefit guarantee, and a cash guarantee, and it has 9 benefits there that really no other product in the marketplace has. The question that you have to ask yourself is the cost worth it? My opinion is that whole life insurance is best suited for somebody who's looking for a money market replacement. If you're looking for a money market replacement, I'd say go for it. Whole life insurance is a great place to get something like a money market. It's going to have a much higher cost up front. Your long-term growth is going to be a little bit better. So maybe a money market or a CD alternative. I think whole life insurance is a great place for a money market or a CD alternative. If you're looking to actively grow your wealth and accumulate as many dollars as possible in an asset that's not correlated to the market, I think the Indexed Universal Life Insurance policy is far and away the better option for those of you looking to do that, because it comes with all the same benefits in terms of tax-free growth, tax-free distributions, non-correlated asset, all of that. The difference is you're not paying for the fees associated with guaranteed death benefit, guaranteed premium, guaranteed cash value. And yet if you want a safer alternative, these IUL policies come with fixed accounts in the 3 to 5% range. And so I just think the flexibility that it offers, the fact that it's a much cheaper version of the same cash value life insurance policy, I think it's the winner for you if you're looking to accumulate as many dollars as possible in a pseudo alternative asset. I hope that this was helpful for you. If you are interested in exploring an index policy or a whole life insurance policy in more detail, I would encourage you to go ahead and go to my website, leveragedwm.com, and you can go to /IUL-review. And I will go ahead and link that at the top of this video. I'll put it in the comments below. If you have any questions, any concerns, if you have any content that you want me to start creating over the next year, please let me know down below. I look forward to seeing you and talking to you in the future. And thanks for joining me.